When I talk to a lot of people, they say, wow, I didn't think we would have this percentage of multiple offers. And I'm really surprised because the thought was that after reading all these articles that, oh my gosh, that the market would be utterly crashing. But then when you start to look at the stats and you go, but it's not. And so here are multiple offers in the Sacramento region. And anytime I say region, I mean Sacramento, Placer, Yolo, and El Dorado. And you can see this real cyclical trend. Okay, this goes over a few years. So here's early 2017. During the spring market, there's more multiple offers. In the summer, there's less. Spring, summer, spring, summer, spring. And so what we've been seeing this year is that there's definitely been more multiple offers. And there's 51.8% of sales in April had more than one offer. Now, the thing to remember though is that usually this peak right here is usually April or May. And so in a normal year, we would probably have seen the peak up here, but we have a pandemic. And so we've definitely, sort of, I think the spring market has sort of sloughed early, and we're seeing, spring, subdued. And so, but here's some cool stats. This is Sacramento County. So 57.7% of April sales had multiple offers. And so in Sacramento County, we have a lot more multiple offers. The region is 51.8, but Sacramento County is nearly 60%. And so I think that's really important to share with buyers. But also when we look at current pendings, so pending since April 1st, 48.4% of those pendings have more than one offer. And so do we see a difference in the market from April sales and current pendings? And so I'm always, reminding everyone when we look at a stat like this, that, okay, this stat is really glowing, but it's a little bit less than what it was, in April and previous months. And so it just reminds us that the pandemic has affected the market. It is slower, and that's why I'm saying that buyers have gained a little bit more power. I say that very carefully because buyers have to bring strong offers if they're going to get something accepted. Here's pending sales by price range. These are pending since April 1st. And what trend do you notice? Here's under 300,000 and the percentage of multiple offers, 300 to 400, 400 to 500, and so on. So what do we see? The lower the price, the more competitive it is, all right? Now, that's not a surprise, but it's kind of cool to see on paper, right? And so, again, the market isn't the same in every price range or every neighborhood, or even for every property type, right? There can be a difference in the market depending on whether we're talking about the Airbnb market, vacant land, 2 to 4 units, apartments, single family, or condos. One thing that I thought was really insightful, I was talking to Scott Thompson the other day, he's a realtor, and he was pitching the idea to me that I wonder about condos and wonder about if people struggle to pay their HOA fees and what that can do to delinquencies over time. Do you remember during the foreclosure crisis how hard it was to get financing on a condo because all their numbers weren't working, too many delinquencies and such. And so that's probably something to watch. Just to be sure. So, but here are all pending sales since April 1st in the region, or excuse me, in Sacramento County. You can see the number of offers, the number of pendings, and then the percent. And so how many pendings have just one offer? 51.6%. And what about 1 and 2? 21%. And so basically it looks like almost 73% of current pendings have 1 to 2 offers. And I do believe that these stats are somewhat subdued. The real number is probably a little bit higher, but I think it's important to note that, look at this, the number of offers, 5, only 3% of the market of current pendings have 5 offers. And so it's really important to be in tune with the market that actually exists, or that seller who says, yeah, we're going to price and get 9 or 10 offers. And then you start to look at the stats and go, gosh, that is really hard to do. All right. However, here's a conversation on Twitter from yesterday. Here's my tweet. I said, I'm curious to see stats in the next couple of days. Having buyers be able to see properties in person very clearly motivated sellers to list their homes. Okay, sellers definitely listed in light of buyers being able to come through. But will this bring more buyers out to shop also? That's the question. Are buyers going to respond now more equally? And you guys have probably seen that already. You would know that if you're getting more buyers, if there's more loan apps, okay? I'm anxious to see pending contracts from this weekend. Specifically, I'm anxious today and tomorrow because usually during any given week, pending sort of hit their peak on Monday or Tuesday. And so I can't wait to pull stats, and hopefully I'll have something to report tomorrow. But here's Mark Delgado, realtor. He said, anecdotal, have an offer out on a place in 95827, and there are 13 offers in just a few days. And so it's always interesting to share these stats because someone always, comes up with a story like this, and I've heard quite a few stories like this over the weekend. And so I am very anxious to see what happens with buyer demand. Is buyer demand going to continue to grow? All right, and so we'll see what happens. But I would call this a price sensitive market. Would you guys also? I'm definitely seeing that, where it's a market where sellers can't just command whatever price they want. Buyers are very sensitive to paying the right price. They don't want to overpay. Sometimes they will, but that's more of a unicorn situation. And most times buyers are they're willing to wait and be patient, and they'll wait for the right property rather than pay too much. But I share this example because it's a property in Bel Air that came to the market a couple years ago, and it had worldwide attention. And it was listed for $250 million. And everyone said that this is the most expensive house in the world, but then it sold for $94 million. So it sold 62% less than its original list price. And so it's ironic because it had viral attention and worldwide exposure. It had all the eyeballs in the world, but it didn't sell because the price wasn't right. And so it just goes to show how powerful price is in today's market. Again, if you need another unicorn to talk about, here's a property. It's being dubbed as the one. All right, and it'll be a $500 million listing. It was scheduled to go live. I'm thinking the pandemic happened and they've postponed that, but here it is in Bel Air, and check it out. What an amazing view. But this house is said to be 100,000 square feet. It has a bowling alley, a nightclub, and 4 swimming pools. Absolutely incredible. But I kind of wonder, who wants a nightclub at their house? I don't know. But I think when we sometimes see these properties, on a much lower level in our market, and most of the time these sensational listings don't actually sell because they're not priced correctly. And so it's almost like they're aiming for that one unicorn rather than the market, right? Here's a different way to look at how competitive the market is right now. All right, so these are days on market, cumulative days on market from 2015 through 2020, okay? And each year you see the black bars. This represents the fall season from September through December. And so here's 2020, the spring, and then you can see the fall season in 2019, fall season in 2018 and 2017. And there's this real rhythm to the market where during the spring season, it takes less time to sell, and then summer happens, it takes longer, less in the spring, longer, and so on. And so right now, what we were experiencing is a normal trend. We would expect to see it take less time to sell. But here's the interesting part to me. For April sales, it took 20 days to sell. Now, remember, only half of April sales reflect pandemic data, but you can see 20 days to sell is really about the lowest that we've seen for any month in Sacramento County for the past 5 years. And so I would say that it was an aggressive month, and people are tending, I would say, even during the pandemic, to make decisions right away. I think buyers have been very aware of a lack of listings also. And so isn't that cool? Kind of a cool stat. Here's the way to look at the market in Sacramento County. You can see days on market by price range. And so above $1 million, it took 51 days to sell. And then look, under 400,000, between 3 and 400, took 15 days, and and so on and so on. But the trend is very normal. The higher the price, the longer it takes to sell. All right. And so it's important to, I think, to realize, again, that the market, depending on the price range in the neighborhood, isn't going to be the same. And I don't know about you, but one of the things that I'm watching is the $1 million market. I feel like we need maybe a few more months of data, but I think with all the challenges with jumbo financing lately, it's something that we're watching, and we're going to, be watching days on market. Is it taking longer to sell? And most importantly, Are we starting to see a difference with sales volume or prices? You know, are people backing off the market? And so definitely something to consider. Now here's some fresh stats. Let's break down Sacramento County from January through just through yesterday. What percentage of sales in Sacramento County have been cash? 11.8%. So does that surprise you? It's pretty subdued. I think when we talk with a lot of buyers out there, the perception is that investors are gutting everything. Now, to be fair, a lot of investors do use conventional financing since terms are so favorable, but I think technically speaking, cash is at a pretty low level. And what about FHA? 19%. FHA has actually made a little bit of a rebound lately, which is pretty neat to see. I'll show you a graph in just a sec. VA is about 6% of the market, and conventional is dominant about 60%. And there's a few other loans that make up a few percent. But here's sort of the breakdown in the region. Then I would just ask you, the question, where are you focused in your business? What type of financing are your buyers using? And it's particularly important to pay attention to right now, because what if things change with FICO scores for certain banks, or conventional terms or FHA terms? And so you might be sort of jumping in and out of different packages and having to get educated from having a good loan officer there. So but here's cash in the region. You can see that it was increasing and in sort of peaked out during the Blackstone days when the investment fund Blackstone was here, and it's really gone down over time. And so it's very subdued. 13.7% of sales were cash in the first quarter. All right. Here's FHA. FHA has sort of been all over the place. It used to be the only show in town about 10 years ago, because there weren't conventional products where you could put 3% down. And so FHA was dominant, but then you started to see conventional products show up, and so they were able to compete. So FHA has really been subdued. But look at this. Over recent time, this is the entire region. Okay, over the entire region over the past year or so, we've seen an increase in FHA. And so I think this is really dynamic and important to understand, because it shows that first-time buyers are absolutely playing the market. And so I think sometimes the tendency is to look at market trends and just assume that buyers are priced out. And of course, some people are priced out. Okay, there's no mistaking that. But I think when we look at the numbers and go, oh, wow, look, FHA has increased, that's probably a positive sign, wouldn't you think? Here's VA in the region. It's definitely, it used to be about 2% of the market, now 6%, seen sort of a slight uptick in recent time. And here's sort of everything. You can, if you choose to download this this presentation, you can sort of look at the end and just assess, where is your book of business? And sometimes we see that, okay, cash has been lessening, FHA looks like it's increasing, VA up slightly, conventional's been dominant. I mean, sometimes those are clues for, okay, what do I need to educate my buyers on? And what might I need to know about these loans in order to help people understand? So the question becomes, are prices speeding up or are they slowing down? And I'd actually love to get any interaction. It's actually kind of weird, guys, when it's webinar form, because I can't see you and everyone could be sleeping right now. I have no idea. And so if you want to say anything in the chat, do you think prices, are they speeding up? Are they slowing down? Are they going up? I mean, what are you seeing out there? I would love to hear what you're saying. Steady, we're here. Hey, there you are, right on. Depends on the property and area. Some people say holding with a slight rise. I spoke in a Zoom meeting the other day, and someone wasn't very happy when I shared some price stats, which at the time looked like they might be declining over time. They're like, what? No, the market is absolutely rising. And I know Marcus is going to make a recording, or Spencer's recording this webinar, and I'll get it on my YouTube channel also. Haven't seen a decrease in prices yet. And I would concur, Dean, and a lot of people are saying, it seems like things have sort of held steady, and I'm gonna show that in a little bit, but thanks guys, appreciate it. Now I know that everyone's here, yay. So let's look at the stats. We always wanna let the stats form our narrative, okay? So here's a monthly median price in Sacramento County. I took a break from sharing these types of graphs, but now we're finally starting to get some pandemic data, and so I'm back to sharing this, not just sort of the crazy daily graphs I've been sharing. So here's April in each respective year, and here's the median price in those years. And so we could see over time, when we're looking at the market this way, that we're up 4% from last April. Okay, very modest, but you can kind of see that the market used to be a lot more aggressive. Okay, Danny says 400K and below, I think, is going slightly up. Yeah, and and that could be. Quarterly median price in Sacramento County. Here's a different way to look at the market, and the more data we get, the more credible we can be. And so here's when I'm looking at February through April, each respective year. And you can kind of see when we look at it that way, you can see that, oh, wow, we had a much stronger quarter compared to the previous year. And so it's almost like we were losing momentum. For a while, what I was talking about that the market was sort of like this car, and it's zooming along on the freeway going 80 miles per hour. And then, the market started to slow down. And for a while there, it was more going like 30 or 40, especially in 2018. That analogy comes from Barry Habib. But lately, the market has sped up, at least in January and February and part of March. And now we're sort of, I think, maybe in this holding phase, okay? But here's the monthly, here's quarterly, and here's the annual median price. When we're looking at the past 12 months of data in each respective year, there's a lot of data here. Usually in our region, we have anywhere from 26 to 28,000 sales. And so, I mean, there's some really solid numbers when we look at this stuff. And so when you can see the change though, sort of the market sort of decelerated, but compared to last year, we're actually up a little bit more than the previous year. And so I would say that the market was decelerating, and then it's almost like buyers put their foot on the gas a little. And really the culprit, I think, was low mortgage rates. The market gets crazy when we have rates in the threes. So here's April data. And I want to say that this, yes, you do have the slides, and I had, I'll share the link one more time at the very end. You can download this presentation. But here's all April data. And I want to say that this is preliminary price data. Okay, I put it up here. I want to be extremely clear about that, because really we should wait about a week or so to pull our price stats. Okay, because my sense is that on the first of each month, if I pull my stats right there to talk about what happened the previous month, I'm missing about 10% of the market. And so right here, there's a lot more sales that are going to get entered into the system, and it could change these numbers. But anyway, for now, preliminary numbers show that depending on which price metric you're looking at, we're up about 5%, or the average price per square foot is up 8%. You can see that sort of our volume over the years down 4%. Days on market, look at the difference between last April and this April. We were down 15 days. And so it took 2 weeks less to sell. But that's really not a surprise, right? Because the market was so competitive in light of mortgage rates going down. Okay, here's the median price in the region since 2014. You can see this real cyclical vibe. Isn't that amazing to see the rhythm of the market goes up and then sort of sloughs in the summer, it goes up in the spring, sloughs in the summer, and without fail. And so we're going up. And then the interesting part right now, preliminary data for the region said it shows that the median price in March was 440, and so far in April it's 435. Now, I wouldn't write home over this and say that we've seen prices decline by 1%. That's what it says today. What I want to underscore this, so important. What would the market be? We want to see this price data in another week when we get all our sales there. Okay, I've learned the hard way. If you report on prices too early, you might end up looking foolish, because in another week down the road when there's more sales and you go, oh, I wish I would have waited because the numbers changed slightly. I don't have all this data for Folsom. I do have some individual stuff for neighborhoods. In my appraisals, I have hyper-specific neighborhood data, but otherwise I report on county and the region. I'm back this month, guys. Next week I'll have a post to talk about, I'll have Sac County, El Dorado County, Placer County, and the entire region. So that's kind of how I drum up my stats. But I'll say that, I don't know if you guys agree, you can let me know if you do, but the entry-level market is more aggressive right? I know this sounds like real estate 101, but it's really true. And I was careful though in my phrasing because I don't want to just say under 400,000 because it's not even under 400,000 because in East Sacramento, basically anything under 500 is entry level, like if you're lucky to get in there, right? And so I would say in East Sacramento, it's really aggressive under 500, or South Sac, it might be, you know, some stuff if you're lucky enough under 250 or 275 or 300. And so I like to say it like this, that wherever the entry level market is in various neighborhoods, that's where it's most aggressive. Okay, think about it this way. The median price in the region right now is, or in Sacramento County, is 400,000. Okay, so that means that half the sales are below 400 and half of them are above. And so what happens is that half the market literally is fighting underneath this median price point. And so it's so important to just realize that when you're educating your buyers and they're fighting for an aggressive price point or entry level neighborhood, I mean, they're going to have to bring their strong game. And so if they qualify for 300 right now, gosh, they might have to start shopping at 270 because something's probably going to get bid up. Okay. Here's an interesting way to look at it. Now, I'm either going to totally wow you or I'm going to lose you with all these dots. Okay. So let me kind of explain what these look like. I pulled these stats 1 week ago. Here are Sacramento County sales under 400,000 since April 1st, okay? And this is the sales price to original list price ratio, okay? This is a really powerful metric, and this is just a cool way to look at it on a graph, all right? So when this ratio, the sales price to original list price ratio, when it's 100%, that basically means the property that listed at 400,000, it's sold at 400,000, okay? And when this ratio is 95%, it means that that property sold 5% below its list price, okay? And so I wanna kind of make some points about under 400, and then I'm looking at above 800, okay? I think there's some cool stuff here. But when you can kind of see under 400,000, there's a lot of properties that have gotten, you know, between 100 and about 107 bid up. And if you notice that here's days on market down here. And within about the first 10 days is when these properties are selling above their list price. And so I always coach sellers when I'm talking to sellers and saying, hey, look, if you're under 400 and you're not getting, you know, offers within 10 days, I mean, maybe you're priced too high, right? Because the market speaks quickly, and these are getting bid up. But I also think it's important to note that, look, these properties, there's a lot that have sold, you know, between 95 and 100% also. And so there's way more above 100%, but it just goes to show that just because it's under 400 doesn't mean that you're going to have a situation where everything is going to get bid up, okay? But you can kind of see the longer a property's on the market, the lower it tends to sell from its original list price, right? You guys know that. It's just cool to see visually. Now here's above 800 since April 1st in the Sacramento region. And you can see there's some properties that have been bid up right away very quickly, but there's much more that have come in at a lower level. And so it just shows that the dynamics are different at the higher end. Here's the lower end, and then here's the higher end where a lot more has sold, you know, around 95, 97%. And so, you know, just something to keep in mind. And again, I think something that we need to watch with particularly above $1 million, but not even above $1 million, probably above 600-700, just to see how is jumbo being affected. And on that note, if you have any insight, if you're seeing anything in particular at higher price points, I'd love to hear your take, and, you know, maybe share your comments with everyone. So, but sales volume is the bigger deal, okay? And I'm so sorry. I know I have an old lady dabbing. I apologize, but I couldn't help it. So, oftentimes in real estate, we're so obsessed with prices, but I think it's so important to watch sales volume, way more important. And particularly if you're in a situation where you're a realtor or loan officer, appraiser, whoever you are here today, the more volume there is, the more deals you're going to have. And so I think from a business standpoint, it gets to be kind of ironic because sometimes the temptation is we talk about prices, we talk about real estate as if it's this ever increasing commodity, but the bigger deal is volume happening or not. And so let me share some stats with you, some really interesting stuff. Here are all sales in April for each respective year since 2014. And so as we look down here, what do you notice about 2020? Can we see that it was way below? And when we look at this, it looks like there were about somewhere between 400 and 500 less sales than there should have been this month. And I think that that's a good stat to watch. It's not necessarily encouraging, but during a pandemic, you know, these properties in April got into contract about 1 month ago and they started to finally close. Doesn't it make sense that we would see way less? Okay, a lot of markets across the country are experiencing a dip in sales volume right now by about 30 to 40% or so, sometimes even more. But I think this is important to watch because you want to look at volume and go, okay, if we're down about 30% or so or more, then then maybe you're going to make 30% less for a few months. Now, I know, some people in the comments and, in my experience on Facebook and everyone, they're really, really busy. But I think otherwise, we look at these and go, okay, there's less deals going around during this pandemic and I better cut expenses. Okay, I have a friend who runs a very successful team and they cut their expenses by 50%. And it's mind-blowing to think. And I just said, wow, you cut by 50%. Did you just feel like you were wasting money then? And he said, I feel so good that we cut this and the team is excited because they can be more profitable. And so I think that this is so important though to watch because we let the stats form our behavior. All right. Now, if anyone's tempted to say that, hey, everything is fine in real estate, that's totally cool if you want to have that narrative. But I look at the numbers and go, what decisions do I need to make and how might this influence me? And so when we look so far over the past year of sales, it's definitely starting to be one of the lower years because we're missing some sales here. And I suspect that at least for the next few months, we're likely to have pretty low volume because pendings have been down, okay? And so the pendings of today will become, sales volume for next month, all right? Here's a similar trend in the region. And you can see April sales in the region. Now, once I pull in about another week, we're probably going to see 50, 70 more sales. But still, I mean, it's down. We're missing 600 sales easily over the past over this past month. And so again, that identifies, all right, probably a good time to cut expenses, a good time to work harder than ever to serve clients and to be in tune with the market and to be grateful for the deals that come. Okay. So here's a different way to visualize April sales. April sales since 2001 are in black, and then every other month is in blue. And so it's interesting because here you can see how low April was. There was basically in the past 20 years, there's only one year that was lower, which was 2007. And so it makes sense during a pandemic that we would see sales volume that was absolutely low. But I think what we want to be careful of is just we don't want to go 2007 right away and go, hey, the market's starting to crash like it was then, because the market, we're in a health crisis, okay? And we're, I think, slowly coming out of that, which is a good thing. But isn't that a striking visual to really show here? Looks like sellers will list later in the year when they have to sell, right? That could be the case. As Singh mentioned, and I think that we're at least last week, we're seeing sellers become more comfortable with listing, and we're going to have to engage the market carefully. Is this going to be a trend that persists or not? So here's a different way to look at volume. I don't want to beat the dead horse here, but volume in 2020 is in blue, 2019 is in red, and then 2018 is in green. And you can see that in a normal year, volume should be going up. And then obviously over the past month, we've seen volume going down. And that makes sense because about a month ago, we started to see less pendings, and this is exactly what we would expect to see. Okay, and so my sense is that this will eventually start increasing. It's hard to say how long it's going to take to get back to a normal market. I know Mike Del Prete is a guy who I've been mentioning in a lot of my YouTube videos lately. He's a data scientist from Colorado, and he thinks that it'll be anywhere from about 2 to 4 months or so to get back to normal. But I mean, I think that's a guess. We'll see what the future brings, but so far it looks like we're starting to see some signs with, okay, there's more listings and there's more pendings. We'll see where that goes. Here's a different way to look at volume. In 2020, these are daily sales in blue since March. And then 2019, these are daily sales in green. And so we can see lately that there's definitely been less sales. Depending on the week, they're usually down about 30 to 40% right now. And so, like I said, that's kind of a popular number, where we see 30 to 40% less listings. We're seeing, 30 to 40% or more, less pending contracts. And so it's no surprise that we're starting to see this. Just remember that these weeks right here, they reflect what happened about a month ago in the market. Remember, this is our Tom Hanks day right here, and it's taken a while for all these pendings to start to close, okay? Let's talk about listings. You guys still here with me, or is everyone sleeping? I can't see you, I can't see you. So in 2019, here are all listings by price range in blue. And then in 2020, here are all listings in green. And so what do you notice? Okay, what do you notice here? Clearly, there's less listings. All right, and so I think it's been a weird dynamic over about the past year where it's almost like we're reaching this point where it could be years of low mortgage rates. Mortgage rates are so anemic, and they've been down for 8 years, and it could be the result of that. But it could also be shifting demographics, people staying in their homes longer and not listing. But it almost feels like over the last year we started to reach a climax where we noticed, and when I pull my stats, that wow, there's hundreds of less listings this year compared to last year. And I'm not even talking about whether we're in a pandemic or not. It's just this overall trend in the market where there's been less that's been coming to the market. Okay, but here's a look at the months of housing supply in Sacramento County. And you can see lately, this past month, it's just over 1.5 months, but over the past year, few years, it's been around 1.5. But do you guys remember this right here that I'm circling? This was in 2018 when mortgage rates shot up and the market started to feel really, really down. Okay, and I think a lot of people wondered, is the turning point here? Have we reached that tipping point in the market? And so you see that we had this really dull season, and I don't know that buyers have even fully recovered from that yet. It seemed almost like there is this hesitancy that entered the market, and it's maybe buyers are still carrying baggage from that, but you can see that inventory is definitely down from where it was then. And so that's probably a good thing, at least for keeping the market a little bit more of a tame feeling. Here's the months of housing supply by price range. And you can see here at the bottom, how much supply there is, really under 500,000. I mean, look, 1.5 between 400 and 500, that's very, very little. And so I think when we saw the 221 listings in the region this past Friday, I think it's excellent news for buyers. Okay, we need this inventory. Now above $1 million, there's 11.3 months worth of houses for sale. Now, before sounding the alarm and saying, oh my gosh, the $1 million market is tanking, some months, if you have more listings and you didn't have very many $1 million sales, sometimes this number can be really, really astounding. What we want to look for is a pattern over time. Are we seeing 11 months across the board for a long time? Then we'd go, okay, wow, there's an issue here. But just keep in mind, the higher the price, the more inventory there is. It almost feels like not a just thing, because people with more money basically have more opportunity to shop. They can take longer to shop too. It's just incredible how that works out. It just seems like an inequity every time I see that. But here's a brand new visual. And I want to share this. I'm really excited about it. I have some visuals in following slides that aren't as chaotic, but this basically shows the months of housing supply over the past couple years by price range. I know this looks absolutely insane. This is probably like Excel sin to have all these visuals on here, but let's break it down, because we just want to realize that inventory is not the same in every price range. Okay, and so here's 100 to 200, 200 to 300, and 300 to 400, depending on the color. And we can see that these price points, basically under 400, has been around 1.2 months. It's been really sparse lately. Okay, here was when the market got very dull in 2018. And since then, mortgage rates went down, and so did inventory, because people started buying homes. So fascinating. This is one reason why the market is so competitive under 400,000 in particular. Okay, now here's 300 to 400,000 in this purple color. And then here's 400, 500 in this blue. they look very similar as a trend. And you could see that, still very, very sparse, even under 500, hovering around 1.5 months or even less. And so there's not that much out there. Okay, inventory is the relationship between sales and listings. Okay, and so interesting to see. Now here's 500 to 750 in orange, and then 750 to 1 million in, I think that's blue. My wife says I'm colorblind. You can correct me if I'm wrong. And then whatever this Pepto-Bismol-ish color is on the top. So we can kind of see that there's definitely more inventory. And so above 1 million, like I said, there's 11 months of housing supply. But look, when you look over the past couple years, this is not uncommon. And so my sense is that sometimes that people look at the $1 million market and they go, oh my gosh, I can't believe that there's 8 months of supply. The market is going to crash, but not realizing that, look, 8 months, that's actually very normal. Okay. It's really normal to have a lot more homes for sale above 1 million. All right. But it's still, I would say, kind of sparse for these other price points. There are more listings. We're above 2 months for 500 to 750, and hovering between 3 and 4 for 750 to 1 million. Okay, so interesting dynamics. I just say again, we have to price for the market that exists, price for that niche market or the price range. All right. I have some more graphs, I have some more thoughts. So we won't go for the full time because I want to open it up to Q&A. But I want to share a few slides about sort of bubble stuff and and price cycles. And so here we see that our median price right now in Sacramento County is $400,000. And if you notice, it's higher than it was in August 2005 when the real estate bubble burst. Now, there's usually two reactions when I share this graph. One group of people says, oh my gosh, we're about ready to see the market go down again. And then another group are like, hey man, what happened here has no bearing on the market today. And so I think that one of the takeaways here is being prepared to have conversation with clients who see prices that are higher. And regardless, I know, when we factor in inflation, it's like not even close. Okay, so my econ friends, you don't have to give me a negative comment here, but I think the key takeaway here is conversation. How are we prepared to have conversation with people, or to realize that, a lot of people might have a lot more equity than they actually think. And so when you offer to do that valuation on someone's house or to pull a CMA, you might be sharing news that might help, move them to list their home. Okay, but I will say that, the dynamics here are totally different. Okay, prices look similar on paper, but dynamics are different. This was a market built on fraud. This was a market where you could fog a mirror and get a loan for $400,000. And this is a market of very strict underwriting. Okay, now we don't have a perfect market. It's certainly in an unhealthy aspect. I think low rates for 8 years have propped up the market. Okay, I feel like it's helped to inflate prices. Investors gutting the market here and having a lack of new construction over a decade, it's really harmed us because we're in this environment of low inventory where it's going to be very difficult for us to dig ourselves out of the hole. And so it's unfortunate because I think we're experiencing the consequences today of really a decade of less building and such. And so, I feel for buyers. Here are price cycles in the Sacramento region based on the Freddie Mac Price Index since 1975. And it's really interesting. This is adjusted for inflation. I like the graph better that way. You can see that when the market was down in red, and when the market was up in white. And so isn't it interesting? You kind of see this rhythm to the market. And yeah, you can download the slides. I'll share the link at the very end. It's also in the comment thread, and it's definitely being recorded also, or at least it's supposed to be recorded. But can you see this rhythm to the market where it goes up and then it goes down and then it goes up and goes down? And I think the temptation is that we get right here and we're like, oh, we're due. And some people would say the 7-year rule, anytime the market changes every 7 years. And I'd say there's no such thing as a 7-year rule. Okay. In California, typically the market changes about every 8 to 10 years. In Sacramento, I mean, it's going to vary, but it does look like at some point it would make sense for prices to do something else. Like there's this rhythm in the market, the median price doing that, or days on market doing this. And then when we back up many decades, we see a rhythm to the market still where it goes up and goes down. It's absolutely fascinating. And so at some point, we would expect for prices to do something else. And like I said, I think some people are looking at today's market going, the pandemic has shifted us, but I don't believe that we have data to really support that notion at this time. But just be aware, because I think there's key takeaways. I think Danny earlier was asking about buyers who are hesitant, and they're in the sense of, hey, I'm just going to wait until prices bottom out. And first of all, I'd say, well, prices have been fairly steady right now, and you might be waiting a long time, because literally, look how long buyers waited. Okay, there was almost 6 years and almost 6 years, and whatever that number is there. Okay, and so this is not to say that we've entered the cycle or that we would decline for 6 years. The future hasn't happened. Okay, someone the other day emailed me and said, I want to buy a house in Rancho Cordova in this particular neighborhood. What is market appreciation going to look like over the next 3 to 5 years? And my statement is always, well, I'll tell you in 3 to 5 years from now. All right, so people must hate that answer, but I think it's the most honest thing. Okay, and so, but at some point we talk to people about price cycles, and even for sellers, I think this is so valuable for them to look at, because sometimes there's this fear going, what if the market changes? But change is a constant in the market. The market is always changing, and we would expect that. For sellers, for some sellers, you know what news they need to hear? It's that famous question that Mike Goby asks. I always give him credit. You know, if we did enter a different price cycle at some point, where do you want to ride down the market? Right? Where do you want to be? Where do you want to live? Where does your lifestyle mandate for you to be? Okay. Do your kids need to be in a certain school district? Because if you're in one neighborhood as opposed to another, you're going to lose no matter where you are. Okay. And so the question becomes, if we did enter a different price cycle, where do you want to lose? Okay. Do you guys like that? I kind of like that. Here's a different way to look at the same thing. I'll let you kind of check this out a little bit more in depth, but you can kind of see that the market, having a period of increase from 99 to 2005, a period of decline, and then we've had a period of increase. And you can kind of see that, price momentum has slowed through the years, all right? But again, if we do enter a season of decline, it doesn't mean that what happened last time during the Great Recession would be the new formula for this time. I think a lot of people look at this and go, wow, here's the new template for every future market change. And I go, no. In the 90s, when the market went down, we lost about 10 to 15% in value. Okay, right here, there was this, 50 to 60% loss. Okay, it was astronomical. It was an anomaly. Okay, and so not all downward cycles are the same. Not all upward cycles are the same. Okay, something to keep in mind. A couple of X factors, and I have some closing thoughts for maybe clients to consider having for this year. So an X factor for 2020 is we have 30 million Americans who filed for unemployment claims since mid-March. I mean, this is just, it's heart-wrenching. It's absolutely insane to think over in less than 2 months that 30 million Americans have filed for unemployment. And so we don't yet know how unemployment is going to be expressed locally. This is a headline. Okay, and my sense is that we need to be careful about imposing headlines on the market. We don't want to look at this headline and be like, boom, the market is subdued, because right now the market is not, it's not crashing because of this. Could this be a real issue in the future? Yes, it could, especially if people are in a forbearance period and they're not paying their mortgages. And, and so it's almost like we have this trend going on, but we don't know how it'll be expressed. Okay, I think that's the most honest way to look at this. Here's an interesting stat that I pulled. I'm sorry, I don't remember the source. I got it on Twitter. But when you look at peak to trough decline in employment through recessions, here's Sacramento County. Let me see, let me find it. Where are we at here, guys? There we go. So during a recession in the 90s, from the dip to, or throughout the recession, the unemployment actually, or employment actually went up 1%. Okay, and then it went up 2% during the recession in 2001, and then last time, 10% of people lost their jobs. And so, not that this means anything for for this next wave, but I just think it's interesting to at least to look at history, and this at least underscores the reality that the market doesn't always behave the same way during every single recession. Okay, here's an interesting thing when we think about recessions, though. you guys are going to slay on Real Estate Jeopardy this week, because since 1998, basically over 20 years, homes in the Sacramento region have grown from 1,500 square feet to over 1,700. And so they've grown 228 square feet over the years. And so what we see is this trend of homes that have become larger in size, okay? Their builders are building larger homes. The market expects larger homes. And so sometimes people will be like, tiny homes are all the rage. Yeah, they might be, but we're building bigger ones. And so we see homes that are 15% larger, but here's why I wanted to share this. Because in 2007, we noticed something really interesting, and these are all sales on MLS. This doesn't even include new construction. But you can see that even among MLS sales, where we have tens of thousands of sales to consider here, during the recession, people bought smaller homes. Okay, and then during a recession too, builders tend to build smaller homes. And so I think that this is important, because if we do enter a recessionary period, we got to realize that people tend to be more financially frugal, and they tend to, maybe be more sensitive to prices. And so if you see in Sacramento County, you can appeal your property taxes in July. Know that stuff. Your clients are going to need that information in a market where people are pinching pennies. But just remember, if you take that listing, if we do enter a recession and you take that listing that's 8,000 square feet, that might sound out like a sore thumb, or maybe someone does want a smaller home. Okay, so we have to pay attention. How are buyers and sellers changing? Okay, here's another X factor: mortgage rates. Here's mortgage rates since 1980. And they're really, at historic lows. It's absolutely incredible. I think when rates started to go up in 2018, people thought, this is it, they'll never go down again, but here we are. And that's exactly why I don't predict the future, why I'm very careful, because a lot of people said, they're gonna go up forever. Not so. So here's a different way to look at rates. I'll let you kind of unpack this. I don't want to spend a lot of time here. This is from Lundquist, though, and basically the the closer you are to blue, the higher the rate. So from 2008 to 2020. Okay, and so the closer you are to yellow, the lower the rate. And so we've had insanely low rates lately. But look at 2018, that was very green and getting darker. No wonder why the market felt so soft. And so it just goes to show that our market is very sensitive to rate changes. And part of the reason why it's aggressive during a pandemic is because we've had the benefit of low rates. Imagine if we were going through a pandemic and mortgage rates were at 4.5%, the market would feel a lot different. Okay, so here's my closing slide, or actually one more after this, but I have a bunch of ideas for who has incentive to buy and sell in today's market. Like, we don't want to just look at trends and, impress our friends and sound impressive in our newsletters. We want to just actually look at them and go, all right, who are the market participants today? And so here's some ideas that I'm putting out there. Lifestyle buyers, I would say the bulk of the market are people who are just moving because of their lifestyle. And so if your narrative in real estate has been buy because prices are up, then it's time to change that narrative and say buy because your lifestyle mandates a move. Here's what affordability looks like. All right, so that's the bulk of the market right now. I'd say first-time buyers are still playing the market. We literally see that. That's not my idea, with an uptick in FHA loans. Okay, Airbnb landlords, be on the lookout for people who want to cash out of the market and who want to rid themselves of Airbnb because they're not performing right now, or they want to convert those to long-term rentals. And so I would definitely rub shoulders with people there. Look for sellers wanting to cash out at the top. I mentioned that. Look for people who want to achieve that dream of selling high and then buying low, maybe buying low somewhere else, or maybe downsizing. Okay, that's sort of always what people want to do. And so in a market like today, when some people are looking to be liquid and they want cash, you think about some people maybe wanting to cash out of their equity and then to have something in the bank. And so just keep in mind, divorce, definitely something to keep on the radar. Some people need a larger home. Some people I've noticed have focused on essential versus non-essential. I heard one realtor on a podcast the other day say, I've sort of identified the essential workers, so to speak, and I'm switching my business to you know, to focus on them. And I just say, wow, don't say that out loud too much. But I get a sentiment that people had more money there. But my take is that I think people in both categories, regardless of their jobs, are going to have needs. And especially if people are losing jobs and they're going to have to list. They may not need to do a short sale because they have massive equity, but they may need to do something in order to stay afloat. Okay, maybe you need to sell. So I'd look for migration out of California, particularly with state workers. They're our #1 employer in the Sacramento region. And so state workers have a pension that they can use, they can deploy in other states. And that California pension can go a long way in Idaho and other locations. And believe me, I've heard more than once some people say, as soon as this is over, I'm getting out of here and I'm moving to Texas. All right. Bay Area migration, definitely a trend to watch. Bay Area folks coming in our market, telecommuting, you know, be on the lookout for companies. It's particularly if the Greater Sacramento Economic Council, if they're announcing certain companies that start to come in the market, you just realize they might bring workers with them. And, you know, and they would maybe have a physical location, or maybe they're going to get people to telecommute. I mean, I don't know. I pay attention to all that. Say, look for people who want to move closer to their families. Look for people who want to downsize and upsize. Look for business owners who need to sell in order to keep their businesses afloat, or they need to sell because they're going to relocate and they've really lost. So investors wanting out of the rental market, I've heard that sentiment, sort of investor fatigue. I don't think that typifies everyone, but definitely something to watch. Look for people who have second homes and want to move them in order to have cash, okay? And likewise, I think people who want to buy second homes who do have cash right now and who are looking for hopefully that, you know, that dream deal, that cabin in Pollock Pines, or they're looking for that lower price, right? Whether they'll get it or not, that's another thing. And last but not least, I'd say investors doing a 1031 exchange. When a market is up, we tend to see more 1031 exchanges. And one of the things that's happened with 1031 exchanges is that the rules have changed in a lot of ways, that the periods are longer, and so you have more leeway in order to make decisions. But I'd say closing thoughts. Number one, I'd just say let your narrative be formed by data. And so what you're saying about the market, I'd highly encourage you to really let the stats form what you say. Okay, but I'd say on that note, keep changing your narrative. Okay, I'm going to be saying something different in 2 weeks from now if the market stats are saying something different. Okay, I'm saying something new, I feel like, almost every day because I'm paying attention. And so don't be afraid to say that. And so something you post on Facebook 1 week might be out of date by the following week. But I just say identify who has incentive to buy and sell regardless of what the market is doing. Okay, I think we buy into this notion that, you know, when the market's up, you know, yes, maybe there's more volume, but people are all the time making decisions in today's market regardless of what prices are doing. So I feel like the real estate community needs to maybe back off prices a little bit and have a different narrative to say, what does affordability look like? What is your lifestyle mandate right now? And last but not least, I'd say you can be successful in any market, but not without making changes. And so I would challenge you, what do you need to begin to change right now for your business or your mindset, or, you know, what experts do you need to surround yourself with, or what skills do you need to add to your bag of tricks to thrive, or I would say to survive in this pandemic market and then thrive later. So this is me. There's my contact information. Here's a link where you can download this presentation.